Yeah, good afternoon once again. Welcome to Datapoint Online Academy YouTube channel. Thank you for always being with us. We're going to be talking about NFP, Non-Farm Payrolls, and CPI, Consumer Price Index news or fundamentals that normally happen within the forex economy space. And the important thing is we the traders sometimes don't really understand what these things actually mean. Some believe in gambling, some believe in just putting up, buying or selling. I think it's just beyond that. That is the reason why I have to do this um, YouTube information so that some of us who have no knowledge about it can learn very well about how to trade it effectively. So please just watch to the end so that you can see all the terms and all everything I'm going to mention for you to apply to your trading system, most especially the newbies. Even some of the old forex traders still make mistake. I've seen a lot of people just clicking buy or sell or whatever. But the truth remains that NFP majorly affects USD pairs, and the same thing with CPI also affect most of the USD pairs and gold, NASDAQ and S&P 500, those indices that actually trade with US stocks. Now, how do we actually trade these fundamentals? Yesterday, I mentioned a lot of things that we can do through using ChatGPT, how you can also use ChatGPT to get your informations right, and how you can also use ChatGPT when you have your technical analysis in place, your structures in place, your inner structures are in place, all your support and resistance are in place. But the next thing is, what next? Understand what the data is saying in terms of NFP or CPI, whichever one that you want to trade. Now, other side is you also need to check the investing.com, which is investing.com. Once you get there, go to your calendars. It's called economic calendars. Once you click there, this is it here, economic calendars. Once you click on it, it brings you to the page where you have all the activities that is happening. Like today, Wednesday 10th of June 2026, we have all this information here. But the one that is actually active, I think is within 1:30 today, this afternoon, where we have the CPIs and the rest. So, and if you check, we have 3 stars. 1, 2, 3 means that it's very active. That is the calendar. Then we also have the CPI, US CPI, which is also very active. But the investing.com did not actually give us a very clear direction of that, because some are still showing, okay, I think we have it more here. Yeah, the CPI 130, we have 3 star. Core CPI, we have 3 star. CPI, we have the 3 star. That is how you know the volatility of each of the news that will be volatile at a particular time. But if it's giving you 2, it's a bit going to be volatile, but not as much. If it's giving you 3, like this 130 CPI May, we have 2 star. It's not going to be too volatile like the one of 3 star. Then the one of 1 star is lesser volatile. That is how the news keeps. Then, if you cannot understand this, you can as well go to forexfactory.com. When you go to forexfactory.com, you have all the pairs, all the analysis. Just click on the economic calendar the same, and you click on today's date. It will give you today's particular date. If you don't want to do that, you can check every other information for tomorrow and next based on the date you have your calendar on your left hand side. So once that is done, check the one that actually have strong red. Then 130 we have CPI, core CPI, the same 130, 130, 130. In between that 130 to like 245, we'll be having US pairs being volatile on CPI. Now, the calendar, which is also rate statement, overnight rate and other, but those ones may not be that strong, but they are also volatile on the trading system. So that is how you identify first what pairs or when is that time each of these volatility will happen. So once that is identified, what next you need to do is to check what are CPI really. For some of us who are new, what is actually the meaning of CPI? Now, if you check the news for today, we had a lot of volatility, but not that strong. Like if you check somewhere here, I'm on gold right away. If you check this place, we see that when CPI came, this market was on bearish. It just moved straight to bullish. That was what gold did. Gold was actually buying. So instead of some people predicted to be selling because the overall direction was still saying a bearish. But at the other side, it doesn't work that way. We need to actually understand when the US is weak, it's supposed to be selling. When the other pairs are a bit, though anytime US pairs are weak, it will expect more sale. But today is in the other direction. So we didn't actually make get a sell, it was a bullish. Now let's go to the main topic of the day, how we can trade this effectively. Um, I have a presentation I made already, which will help us to actually do this breakdown on how this market actually work. Now, for us to trade this effectively, we must understand that your attention is always going to be very, very important when it comes to NFP and CPI. So what we have here is NFP trading for beginners. Now, NFP trading for beginners means that how do we trade NFP like gold, JBP USD, USD CAD, USD JPY, all the USD pairs are going to be very, very volatile. Now let's start. Trading gold like a pro, you need to understand NFP, understanding market reactions, NFP, stop guessing news direction, learn a proven trading process. These are what we are going to understand today when we are going to um look at NFP and CPI in general. These are the things you benefit. So you will stop guessing, you will trade gold like a pro, you will understand market reactions or direction, then everything that gets to do with that. So let's go. What is NFP? NFP is measured jobs added, lost. Maybe job you have added, job you have lost in an economy, most especially in the US. So that is what non-farm payrolls is actually all about. Maybe you have added some jobs, you have lost some jobs. So when there is any indication that some jobs have lost, the market will drop. When there are indications that markets have made some profit, the market will go bullish. That is how it works. Now, strong jobs with strong USD. When there's strong USD, you are buying. Weak jobs with weak USD. When there are weak USDs, you are selling. Job impact on gold and forex. No, most of these major impact is that the major impact on gold and forex is that it also affects gold. When the jobs are strong, it buys. When the jobs are weak, it sells. Because gold actually go with more of USD pairs, and that is the system in gold. So that is what we are going to be learning today. Just follow us to the end. I can assure you that you will have a lot to learn at the end of this class. So creating high volatilities. How does it create high volatilities? It creates high volatilities in the sense that when there are job losses, it becomes volatile by trending down or by bearish. But when there are also good strong jobs, it becomes volatility. The volatility becomes higher in the area of bullish or buying. That is what we have here. Now, on the other side, the strong NFP, strong economy, it means that the economy is very strong when the jobs are being gotten more or added more. So expectation is USD will be buying. Now, on the other side, when there are weak NFP, weak economy and lower rate, expectation is that weak USD and gold rises. So in that case, when gold is also, in some cases, when USD weak, gold will rise. So when gold rises, sometimes it also weaken the USD. In some cases, depending on the news, some both may go on the same direction. So it's very, very technical, very, very difficult to actually guess these things. What you need to do is to first of all know what are the causes of this volatility and go through your research, understand the US rate data analysis so that you can understand, and also study the previous. Ask ChatGPT or go to Google, ask what are the previous NFP or CPI data analysis. Study them carefully and understand what to do when there are such reactions coming your way. So that is what we need to understand. Now go to the next one. Best pairs to trade during the NFP or the US CPI. The best pair to trade are more of Euro USD, JPY USD, USD JPY, gold, which is SAU USD. So the indices are uh, those pairs that also have USD reactions, which are based in the US, which is US 30, which I've also said in my previous videos that US 30s are more of 30 different companies that comes together to form an entity. And the same thing with US 100, which is also known as NASDAQ. It's also 100 companies coming together. Most of those companies are strong multinational companies like Tesla, Microsoft, Google, a lot of them, they all come together to form that companies. So you can do your research more to know more of those pairs that make the US 30 and US 100, and at the same time US 500, which is S&P 500, right? So for beginners, focus on gold and Euro USD. But for the gold, I would say when you are trading gold as a beginner, you need to extra very careful. Your risk management is very key when it comes to things like this because gold is very volatile, and the same thing with all USD pairs when it comes to trading NFP or CPI. But in most cases, what I do most is I don't trade more of the fundamentals with my major account. We could just fund like $100, $200, $50, depending on what you're able to say, okay, you can lose. Then target, okay, position yourself very well, do all your analysis, your technical analysis to be in place, all your structures to be in place. Then you can now make a decision to say, okay, you want to buy or you want to sell. So once that is done, then you can now take it up fully. Now, this is how we trade NFP and CPI. Now, the next is common mistakes sometimes we make. Now, as a beginner, or not just as a beginner alone, some of the traders also make the same mistakes. Sometimes we entry before news because you don't know the direction of the news. But if you're already on the trade, you can tighten your stop loss so that whenever it goes positive or negative, it could be of your favor. If it doesn't go positive or your way is negative, you lose little. So that if you have on profit before, you don't lose too much. If you are not on profit, you still don't lose too much. But if you happen to go your way, maybe you extend your take profit for it to be more massive, then you have more profit. Sometimes people call it guessing, but it's not guessing. Data is key. You need to study your data, understand the data so that you can know how to do the forex is about research. No, if you carry out your research, I can assure you that you will gain a lot when it comes to forex trading. Now, no stop loss, man, this is deadly for somebody to trade without no stop loss. I don't encourage it. I don't advise it for anybody for whatever any reason. So always put your stop loss, even if it's going to take you off, it's better than losing your account, right? I've seen some people who just fund account for that purpose to trade NFP or CPI. Once that spikes coming, it takes them off, that is all. If it goes their way, it takes them in, that is it. But some trade by funding two accounts, one for bearish, one for bullish. Well, in whichever way strategy you want to use, but I don't really too believe in those things. All I believe is you have to trade in a strategic system that can help you to do your trading mass in a calculated way so that at the end you will have a lot of positive results to end up with. So now let's go further. If there's any comment or anything you need to know much about this trading system. So just do well to like us, as likes, subscribes, and or make comment. Tell us what you want to understand, how you want us to put you through in things like this. We are very, very ready and active to support you. Just let's go to the end of this training. You will understand what it takes to have a forex trading when it comes to fundamentals that people are always running away from. Now, the biggest secret, stop predicting. I said it earlier, you don't predict when it comes to NFP, and the professionals react to actual data. What it means by actual data are those data that released by the economic makers, and also follow your market structures. Once your market structures are in place, I can assure you that you will also get a lot of results at the close of the market. Now, the goal is to make money, not to be gambling, or to be right or not to be right. Sometimes you could be right and the market will take it the other way. So you must understand how all these things work effectively. Now, my simple NFP strategy: one, I wait for NFP to be released. Now, after wait for NFP to be released, you give it like 5 to 15 minutes volatility to work out. So once that is done, the market settled, then it comes to your structure, then you follow the structure of the market, right? So once that is why we say that in any trade you want to do, structures is also very, very key. Once you follow structures, you are still very sure of your profits. Now, once market volatility is done, within 5 to 15 minutes, you can enter your trade. Now, remember, there are some prop firms. If you are trading prop firm, there are many prop firms they don't like using their account to trade prop firm, because the reason that if it goes your way is positive, the testing they are actually testing you, it will not be proven that you can trade, because trading fundamentals sometimes is not your right, because if you decided to go for positive or negative, in some cases it might be your luck. So that is the way they consider it. That is the reason why they don't always allow people to trade their prop firm um, with news, whichever way. But some also accept like funded nest. I know that very well, that they accept news. So now let's move ahead. Now identify the direction. Identify the direction through your structures you have laid out, we have worked on. So once that is done, you are sure that you are on the right track. Now the next is wait for pullback. After the 5 to 15 minutes, markets must have spiked. After the spike, then you wait for pullback, either pullback to down or pullback up to form a structure, then you can take your entry. Now the next is enter with confirmation. Those confirmations are those things you will see. One, your point of interest. Two, your candle formations. Three, your trend line, if you are using trend line, or your FVG, or your resistance and support, whichever strategy you trade, just wait for confirmation. Make sure you have your confirmations are in place. If you are using moving average, maybe you want a crossover, make sure you are sure. Let your confirmation be proven that you are actually right. Out of 4, 3 is right, or out of 4, 4 is right. Out of 4, at least you are sure of what you are doing, then you can enter your trade. So, good example. For instance, when we have weak NFP will give you USD weakness. Sorry, weak NFP give you USD weakers, then your resistance that will be pullback, then you can buy. That is the way it works. So your risk should be 1 to 2. For instance, if you are risking $10, you expect $20. If you are risking $20, you expect $40. At least 1:2 is very best for such example whenever we are trading either USD or gold. Anyone, does not really matter for only gold. Anyone that you want to trade, right? Now for bearish, when you are trading NFP, when the NFP is strong, USD is strengthening. That means it becomes more stronger. Then support, you have your support. The pullback that will pull back to your support, then you can sell. If it's a bullish that has spiked up, then it goes to your support or your resistance, whichever way. So always have a way you monitor these things. The same thing target 1 to 2. Now, your risk management, I've said it over and over in all my analysis that your risk management is very, very key. And whenever you are trading, always make sure you follow proper risk management. Risk only 1% in whatever account you have, except you just want to flip the account. And never move your stop loss. So sometimes I've seen traders, whenever they trade any of their trade, when it's going on their negative or it's not going their way, they keep moving stop loss. That is where accounts become having issues. So you can imagine you have $20 stop loss or $30 stop loss or 200 dollar stop loss, and you keep moving to 400, 500. We all made that mistakes. I can remember there was a time I lost one account of $600 when I was learning. What caused it was when I was trading USD JPY was going against me, and I keep moving my stop loss, thinking that the market will reverse. At the end, this market was fully on a bearish trend, and I keep moving my stop loss until my account becomes zero. So take partial profit whenever you have such a profit, especially in NFP and CPR, because there's always going to be a retracement time to time. So once that retracement happens, you tend to lose out the profit you have seen already. So protect your capital first. If, for instance, you have your capital in place, just protect your capital. Make sure your capital is safe, because that is the key thing that is important at that particular time. Once your capital is safe, then you are good. So it's always important that you save your capital. So the explanation is, if you are $100, take one risk, 1% risk. If you are on the $500, take $5 risk. If you are $1,000, take $10 risk. So you can also do your calculation based on what you think you can afford to lose. If you are going to take $2, $3 on your account, it all depends on what you feel you can afford to lose at a particular trade at a time. But remember, your capital is key and is important. Now, NFP trading checklist. So always remember that before you trade, your support and resistance must be in order. Then your forex economic calendar, you must check it, which I've said earlier. Then the other one is wait for the confirmation for a proper direction. Enter a pullback whenever you have a spike. Let the spike get settled and relaxed before you enter. And at the same time, manage your risk properly. You need to manage your risk properly. Now, the reality of NFP trading, there is no strategy. Nobody can tell you that it's 100% real when it comes to forex trading. No strategy that is real. So that is wins 100%. They are all real, not matter of real. They are real, but it's not 100% win. Then consistency beats prediction. So whenever you are trading, the mistakes you make today, journal it. So that journal will help you for tomorrow to make your research, to see whatever you have in your trade that has given you that losses you have encountered or you've had. Then learn through that process and make correction on your next trade. The risk management beats greed. For instance, you have seen trade running on your NFP giving you over 1 to 3 ratio or 1 to 2 ratio, and you want to get 1 to 10 ratio. Before you know it, the market will retrace and you will lose out all the profit you have made. So don't allow greed to be your management system when it comes to, in general, forex trading, not just NFP and CPI. But what we are talking about today, our key point today is the NFP and the CPI, because of the spikes and the reactions that normally happen in between that period. Right? Now, the final message is stop guessing the news. Stop guessing the news. Stop guessing the news. Now, you don't guess news. Now, I've said it earlier, there are many factors you must take, which is the investing.com and the forex factory. Check all those things. Check your data check your previous information that has happened. Check, also go to ChatGPT, which is one of our key area today where we do more research. Ask, what do you think the analysis data going to be released to look like? It might not be able to give you, but it will give you some guide on how you can overcome any losses. Now, wait for confirmation before executing any market. So those confirmations are very key. Some are candlestick formation, some are your moving average depending your indicators you are using. Some are your trend line or your support and resistance depending on your strategy you're also using. Some use other blocks, some use FVG or whatever. So these are different types of trade we all follow. I told you earlier that you have to wait to the end of this trade so that you can get the accurate message which we have for you.